Hi, welcome to the Funny Finance Guy, and today we shall talk about how to pick winning stocks. Before we start, let me do a couple of definitions. Number one, what I mean by winning stocks are stocks which increase in value. And number two, the methodology of us picking winning stocks is via fundamental analysis, which has its roots from value investing, and value investing is used by Warren Buffett as a way to stock pick. So this video will be divided into three sections. Number one, we're going to have a basic example on how companies create value for their shareholders. Second, what is your payoff as a shareholder? And finally, we shall use real companies to prove this concept. So imagine one day if your friend came up to you and tells you he just started a restaurant. In this restaurant, he only can afford 5 chairs and he rents a small little lot. Having said that, his food is so good that every day there are about 20 people lining up just to eat his food, and he just cannot cope with the demand. So your friend asks from you about $100,000 in exchange of 50% for your friend's company. Agreeing, your friend used that money to expand the restaurant, and he buys at least 20 chairs to serve all 20 people. Okay, now, so let's look at the numeric example. Now, this is where your money was initially, your 100,000, which was in a bank, earning about 4%. However, after your investment in your friend's restaurant, he can now serve 20 people, and he earns about $10 per person. And assuming if the restaurant is open every day, you get about 73,000. Once you have divided the earnings based on the percentage you own in a restaurant, you get 36,500 as the owner. Having said that, you and your friend think it's relatively prudent that you keep half of the earnings for the restaurant's growth and the other half you pay as dividends. So essentially, you get about 18,250. And this is the returns on investment you shall get after investing in your friend's restaurant, whereby we take 18,250 divided by 100,000, we get 18.25%. And when compared to the previous investment you have made of 4%, the current investment gives about 4 times more returns compared to the previous investment. So today we're going to take the example of two companies. One company creates a great product and the other company creates great movies. Which companies are those? The first is Apple. As we know that they are the first ones to create the smartphones in the market. And if you put your money with them for approximately 10 years, from December 29th, 2006 up until December 30th, 2016, you will enjoy a return of 85% per annum. And your initial investment of $12 would balloon up to $115. And among the ways Apple may use their shareholders' money to create value would be perhaps creating a better camera, maybe a battery life that can last longer, or maybe a better screen resolution for both their iPhone and also their iPad products. And the second example of companies creating value for their shareholders would be Disney. Over here, Disney currently owns the Star Wars franchise, which has been doing relatively well in the box office. And in terms of returns to shareholders, your 34.16 will balloon up to 104.22. This would give you a return of 20.15%. So among the ways that they can create value perhaps is hire more AAA movie stars, maybe more explosion and more CGIs, and also get better scripts. By taking these three actions, it may increase the demand of their movie tickets, translating to an increase in earnings. Having said that, there are certain stocks which actually go up in price despite them being loss-making entities. Why? Number one, it could be out of speculation, whereby there are no fundamental reasons for this stock price to go up. It's just a bunch of people buying that particular stock and pushing its price up. The second could be fund managers taking position. An example of this would be assuming if they think gold prices or coconut oil prices are going to go up, what they can do is they can purchase this company way in advance before the prices of these commodities were to go up, hence affecting the earnings of the companies in question. Okay, thank you so much. And if there are any questions, please write it down in the comment section and let me know. Thank you.